Gentlemen, ladies and gentlemen, welcome to the first chapter of Trading Game 101 with Pips to Porsches. And today we're going to talk about market structure. I'm going to go through everything involving uptrends, downtrends, consolidations, uh, areas of support and resistance, points of interest, wicks and imbalances, break of structure, highs and lows, time frames, who's in control of the market, and at the end, hopefully, we'll be able to create a little gumbo for you to make your own sauce. So, with that being said, let's get into it. Now, I want to identify the first thing that's on my list: uptrend, downtrend, and consolidation. Okay. So, right here, this green arrow, you can see prices moving up. So, anytime you hear uptrend, we're going up. Okay. And vice versa, downtrend. Anytime you hear downtrend, we're going down. Now, consolidation. Let me mark off another one of these for you. Consolidation is an area where price is just kind of, it's not going too far up and it's not going too far down. It's kind of staying in this zone, okay? So that's consolidation. Now, higher highs and higher lows, this is how you identify an uptrend, okay? So when, let's just say price broke out, let's say price had this breakout here, right? We had this high here, and then once price broke out, it made a high here, okay? Take this over here. So we got a high that's about this area here, right? And then once it breaks above here, where does it go? Here. And then, excuse me, after that, it goes here, okay? And then it goes here, and then it finally goes here, and then it goes here. So anytime you're identifying an uptrend, you're always looking for higher highs, okay? And lower highs or higher lows, I guess. I don't know. I don't want to confuse y'all. So uptrends, higher highs, downtrends, lower lows, okay? So in this example, when price made this low here, then the next place it went was all the way down here, then here, and then finally down to this last level here, okay? So just remember that. Uptrends, you're looking for higher highs. Downtrends, you're looking for lower lows. And in consolidation, it's basically a zone or range where price isn't going too much higher or too much lower. Areas of support and resistance. So this green line here is representing support, and this red line up here is representing resistance. So anytime price is falling, right? Price is selling, and it comes to a certain level and finds support to where it stops falling, that's what we consider support, especially if price is falling and it turns around and retests this area of support a few times to turn around, reverse, and go back up. And it's vice versa for buying, I'm sorry. So when price is going up, as you can see, price is going up. Let's use this one actually. So price is going up, right? It comes up to this area here and immediately meets resistance and does what? It turns around. So anytime price is selling and it stops falling and it reverses and turns around, that's gonna be known as support. And anytime it's buying and it can't buy up any higher and it turns around, that's what we know as resistance. Where's price having trouble? Okay, points of interest. Okay, really, I said price quick movements only to return to its present position. So I'm just gonna label it in simple terms. The points of interest would be anywhere that price, makes a significant reaction. So this level of support would be a point of interest, and this level of resistance would be a point of interest. Just because we've seen that when price came down here, it instantly reacted and actually made price turn around and go the other way, and vice versa. When price hit here, yes, it poked through, but it wasn't strong enough to stay above this level of resistance. And this strong level of resistance caused price to go back down. Okay, so that is points of interest. Now, wicks and imbalances. anytime we see Wicks, it's really indecision between buyers and sellers. Okay, so like this, we had this wick here. This candle represents um, basically sellers came into the market, but buyers had enough strength to turn it back around and push up. Okay, just like here, sellers, the pink is buying and the turquoise or the teal is selling. So we see that sellers came into the market heavy, but as soon as they hit this level here, right, they didn't know who was in control because the buyers came back into the game, right? They were buying this whole time. Sellers started coming in, right, tried to take the market down, right? Buyers, forced the last little bit that they could, and then the sellers finally took over to get them to come back down to this support level. Okay. So anytime you see wicks, just know that it's basically a level of imbalance where price makers, the buyers and sellers, they're at an indecision. They don't know what they want to do. Now, break of structure. So initially, what a break of structure is, let's say we have this high here. Okay. Now, whenever price, let me see, whenever price came all the way up to this level and broke above this previous high, that's considered a break of structure. And usually when we get a break of structure, it's an indication that price wants to go in that direction. So we had this high here. Even when we had this little high here, price came down, right? Made this little high, broke above it. So that's like an indication, like okay, we kind of see where price wants to go, but being patient in this game pays. So what we do, we wait for it to come back down and see what it's gonna do, and then boom, we got this strong break above this high here. Initially, another break of structure, and so let's see if I can find a better one on the sell side. We have something like this to where price is going up, right? And then at this level here, it breaks below, right? Because this was a previous level of support, right? Price wicked down and made this low. And then after it went up, it came back down and broke under and it retested this level and then broke back down. So you can even see it on this side also. Try to make this straight. Price, right? It actually made a low here and then kind of, fumbled the bag a little bit here. So it came, broke below this structure here, right? Retested it and then broke below it again. So you can kind of get the idea that whenever we see a break of structure in a bullish or a bearish direction, then it gives us, basically an idea of where the market is trying to go. Now, highs and lows. Anytime you see something like this, move this up here, something like this, or you see a low down here, it's basically a point on the chart where price was at its highest of its momentum in that trend or the lowest of its momentum in that trend. So, I mean, it's pretty obvious here. Like, price came up, made this high, right? And then it turned around and started going down. And then once price got down to this low, it got to this point, right? And turned around. The market is going to show you plenty of highs and lows. Like, I'm going to try to pick out the best ones. Oops. Just to give you guys a better idea, right? So this down here would be considered a low, okay? Right? This down here would be considered a low. This wick down here into this area is considered a low. This point would actually even be considered a high also, because at the time in this price movement, this low was made and then this high was made, right? And this would be a high, and this would be a low. So hopefully you guys get the idea of highs and lows. It's basically price swing points, okay? So now we're going to talk a little bit about time frames. So when you're basing, I mean, you know, every trader is going to have, let me go to a different chart. This one's all wacky. Whenever you're basing your trades or forming a trade, what you're looking for is higher time frame confirmation on the direction of where the market is going, okay? So as we can see on this time frame, this is the daily time frame, and I mean they go up to weekly, you know, monthly, and this is every candle represents 1 month. So these are all of these candles that you see and all of these trends and that, you know, everything that you see right here represents 1 month, each candle. So we can see from this point here that price made this low and it ended up turning around. So this would be a point of interest, right? And it came all the way up here. I mean, it made this high too, but we're gonna just go ahead and go with the big swing pivots here. And it came up and made that high, okay? So that would be in this area or potentially getting close to that area. This would be another point of interest, okay? But ultimately, we're using time frames to build the bias on price direction and where it potentially wants to go next. So the better you get at analyzing price action and price movement on the higher time frame, the better your trades will be inevitably, and you know, the better your setups will be. That's basically how I wanted to explain it. Not necessarily your trading be better, but your setups to take you know, better trades and higher probabilities of winning. So in this example, we're just gonna go through, you know, who's in control of the market here. So at this low, sorry, at this low, I'm gonna use this box because it's kind of hard to draw the spheres. This, I mean, you can still consider this consolidation, even though this is on a monthly time frame, right? But it's still at a point where it's not going too much higher, it's not going too much lower. Okay. So we have this low that's being made here, and then we have this high that's being made up here. Okay. So from this low to this high, we can see that this swing, that's what they call, from one pivot point to another, is called a swing. We can see that buyers are in control of the market. Okay. Trying to let me turn this green so y'all can. We can see that buyers are in control of the market. Yeah, we had a small pullback, right? These are called pullbacks or retracements. We had a few retracements in this move upward, but inevitably, overall, the buyers were the ones that were in control of the market. Now, in this position that we're kind of in now, we can see that what sellers are in control of the market, right? Let's just box this off. Right? So from this high that was made, price starts coming down, coming down, coming down, and we can see that what sellers have entered the market, right? Sellers have taken control of the market. I'll say that. So how you can put together a little sauce on this, right? You're going from a higher time frame and building a directional bias on the market. So if we can, let's just do something that's a little more relative to the time right now. I'll just do this. Okay. Delete this box. Oops. Because I want to use this one. Now, what I could do is I could just drag this box all the way over because it's still relevant. Like price was all the way up there and then it came all the way back down to where, this consolidation level was, AKA another level of major support here. So that would be another point of interest in this area. So what we can tell from this is like, okay, we see that price is still coming down, still coming down. Whole time is making lower lows as price is moving down, right? So this is the high, the low, a lower high, lower low, lower high. Then we kind of have an equal low here, but eventually we break all the way down here and make this low. So now we got this. It broke under structure again. So inevitably we'd be looking for sells, right? Because even though we had this big move up, it could just be coming, to take out the liquidity that's above this area here and continue back down. But we don't know that. So from a monthly time frame, we can just say, okay, the strength of the market is still going down. And as we go down in time frames, we can still see, little hints and clues because this was considered a high, right? And then it came down and made this low. So now from this point, we're saying, okay, what does price want to do? We're looking for any indications of price wanting to go higher or go lower. Now, seeing big candles like this means a lot of momentum, right? A lot of market makers putting money into the market and moving the market, right? No trader, none of us traders have enough money to make any type of ripple in this, 3 point whatever $1 trillion market that we trade. So these are banks, these are institutions that have all the money in the world and they're dumping money into the markets. Like once we got up to this objective here, um, we bought up to sell off. Okay. So we can see that in this area here, you could just consider the market makers collecting all of their money and letting off their positions. So now price is just falling back down, falling back down. And, we had a bounce here. Uh, but who's to say that in this area here, price is going to keep continuing to go up because they like to, they like to trap new traders. So from here, we're still saying that, all right, well, for these last couple of weeks, we've been bullish, but it might all be a move just to have brought the market up to go back down, okay? Because this red box that's under this whole structure is one of our points of interest from way back here from literally the 2000s, almost around the same time, or 2001, almost around the same time. So if we go down to a daily, all right, we can still see, and we're just looking at these candles now. If you can see, these candles are pretty big, right? Pretty big moves, pretty big pushes going on. But as we get closer and closer and closer to this level that I marked off here, right, which is this high, these candles are getting weaker. And as you can see, we have a little consolidation over here also. So what does that initially, this is telling me that the market makers are building up orders, right? They built up a bunch of orders here. They bought it to sell it off. So now they could be in this same area, potentially selling off because if they want to buy up, then they're going to have to sell off a lot of their positions at this same area where um, they were selling here before. They bought it to sell it off. So we could see the market push down a little farther to go up, or we could see that everybody's letting out their positions once again just to push the market back down into this bigger point of interest. So that's that. guys, and I will see you all in the next video.